What's up, YouTube? Welcome back to another video. Inside this video, we're going to be talking about time and price. We're going to be talking about how to trade Asian session, what to do with Asian session, how to use Asian session manipulation, and we're going to just show you some examples of what usually happens when you're trading Asian session and how you can use Asian session and really all the sessions to your advantage in the markets, and how you could structure yourself depending on the trend to catch the easiest entries depending on what session you're trading, and how to structure yourself around the sessions. All right, we're just going to be talking about what goes on around these sessions and how you can use these sessions to your advantage and to more understand what's going on. All right, so if you are interested in the Discord, the link is in the description. We have a mentorship Discord where we teach our students how we trade smart money concepts, Wyckoff. We know Wyckoff can be very confusing, and we try to simplify it as much as we can. So if you're interested in that, link is in the description. All right, we also have one-on-one sessions, okay, for those of you who are interested in. We also have free services as well, like Telegram. We post setups in there as well. Instagram, you go on my Instagram, sometimes I send free trades that I'm looking at and things of that nature. Okay, so if you're interested in any of those, the link is in the description. So here's kind of an example of what we see when we're talking about Asian manipulation, Asian session manipulation, and London session manipulations, and how do we use that to our advantage. All right, so this boxed area right here is Asian session. All right, Asian session will usually create a range. Sometimes it can be, a range could be anything. A range could be something like this. That could be a range, or it could be as small as this. All right, just understand that this is Asian range. All right, personally myself, I don't trade during Asian because price action is slow, and another reason why is because usually you'll see a manipulation come in at Frankfurt and quote unquote London session open. All right, so you usually see a manipulation during pre-London and London session. All right, so that is this next phase right here. First, you'll have Asian session create the range, then you'll have London comes in and manipulate the highs or manipulate the lows. All right, in this case, we're in a bullish scenario, so we want to see the lows get rated. Once we know the lows get rated and we trade above this manipulation that caused us down, right? Once we trade above that high that caused the manipulation down, we know that the markets want to go higher for that day. Okay, we can anticipate that, and that's a good setup for us, because if the market is already bullish, all right, if the market is already bullish and you're seeing Asian lows get rated with breaks of structure and signs of intent towards the upside, then you can anticipate that the market wants to continue higher for that day. All right, if the market is already bullish, it's a simple trade for you. All right, but you don't want to be counter trend. You don't want to be counter trend trading this. Okay, so we have the lows get rated right here. Okay, after that you'll see a bullish impulse. After that bullish impulse, the next step is to identify your sponsor candle / order block, whatever the case may be right here. After London session has made its manipulation, you'll see the market will start to retrace. All right, this is what happens during overlap, and then as soon as New York comes in, it's New York time, you'll see a mitigation of the manipulation, and the market will continue the intended way. All right, this will happen if we are in a prime bullish scenario. If the market is bullish and we're continuously making higher highs, higher lows, and you see that the market wants to continue higher, this is a typical setup that you'll see. This is a simple setup. All right, usually when I'm in a bullish scenario and I don't have a certain point of interest, or the market is just way too bullish and it just continues towards the upside, this is what I look for. I look for the rate of Asian session, a rate of Asian session lows, a break of structure, and the market continues to the upside. All right, this is something you can use right now in the JPY pairs, especially USD JPY, GJ, just because of how bullish that the markets are, just because of how bullish those certain markets are. You can see that really they're not giving any pullback. So this is typically what you want to look for in a bullish market like that. All right, so this would technically be the same thing, but in a bearish scenario. All right, and this is typically known as redistribution, and the bullish scenario is typically known as reaccumulation. All right, Or depending on how the market has formed this could be an accumulation depending on where it happens. All right. So, I mean, don't get too stuck on the terms. I'm just giving, an extra insight of what it could be. This could be termed as an accumulation or a reaccumulation depending on where it's at. Now, meaning if this happened, if the market was coming down already, put this red. So if the market was coming down and then we stop, this is an accumulation, right? But if the market was already bullish going towards the upside, all this is the continuation move. So you see how depending on where the market was coming from, that would determine whether it was an accumulation or not. So like I was saying, if the market was bearish and we're coming down and then you see that we stop and create this is an accumulation. This is the change of hands. All right, this is known as the change of hands. The market is changing from sellers into buyers to continue back towards the upside. All right, that is an accumulation. But if we were already bullish and the market is just continuing towards the upside, this is a reaccumulation, meaning it's just a continuation move, meaning the accumulation probably already happened down here, and all this is a reaccumulation, meaning the market is reaccumulating orders. They're buying the market again. Instead of them coming down into a point of interest, they just want to continue the market towards the upside. All right. Okay. Starting over here with this first accumulation, we can see that this is technically, let's see, a 4 drive, I believe. Yep, 4 drive accumulation. Selling climax, automatic rally here, secondary test in phase B, spring. Okay. Now, without even looking at the accumulation, and then we're missing the test, right? We're missing the test of the spring. That's what we're missing, that we're going to see soon. But without even looking at this as an accumulation as itself, right? Let me go ahead and just delete this real quick and just delete all of this. So without even looking at this as an accumulation, we didn't even have to worry about these drives that I just talked about. Just looking at A's in session itself right here. So we're looking at A's in session. What do we want to see? How do we want to see the market react? Well, we want to see whether the market is going to rate the highs and lows. Well, we rated the lows. Rated the lows of A's in session, and we can see this huge impulse to the upside, taking out this high and ultimately trying to get back up to here with this supply zone over here. I don't think we made it up here. We got close, but we didn't make it. Okay, so even so, let me go ahead and delete this real quick. Even so, looking at that, what is our point of interest? What needs to be mitigated? This right here. This needs to be mitigated. This is the area that we want to see the market come into. Okay, so after we see the manipulation of Asian session, the lows, we see the market impulsively move to the upside for the rest of the day. Now we can conclude from that this right here is our order block / sponsor candle that needs to be mitigated. All right, this right here becomes a point of interest that we could look for some type of buys, and or if you're comfortable enough, you can set a limit entry on this. All right, so that's just one example. And if I go back, you can kind of see what happened here. Came right back into that area that needed to be mitigated. All right, so let's zoom into here. As we got into this area, we can kind of see the exact same thing. All right, this is when you can see that the market is starting to initiate a trend. Okay, so now let's look to see what happened. Exactly the same thing. We have A's in session, gray box, right? And you can see that we just ever so slightly took out this one low. All right, we took out that little wick right here of A's in session, and we can see the market just explode towards the upside, breaking all of this highs, creating another accumulation. All right, we can see the drives towards the downside. We can, label this as we did before, but we don't even have to look at the labeling. We don't even have to look at all of that. We can just see that just by the raid, the impulsive move. All right, so you can see how simple we can simplify this just from A's in session alone. All right, now we have the market move up again. Okay, so that's the two accumulations I wanted to cover. You can see the exact same thing happen on both accumulations. So here are the two accumulations here. Another accumulation, right? So after that, you can see that the market is continuously just mitigating the same kind of areas. All right. So we have a mitigation right here. The market comes back, mitigates this. All right, so when we have a series of accumulations occurring, and you can see the market is maintaining these lows with mitigations, that is telling us that we are accumulating orders. The market wants to go higher. When we are maintaining the lows, if you are in a bullish trend, you're looking at a market is going in a bullish trend, the one thing that matters is the lows maintain. Okay, you can see these lows here, accumulation. This first low that created this accumulation, it held. Okay, we didn't break past it, we didn't invalidate it, so we created another accumulation off of it. This one held. All right, we came and mitigated it, mitigated again right here, and then you can see now the market is initiating the trend. Now let's look at what happens after we get the accumulations, and let's look at the trends. All right, but one thing else I want to say is look at these Asian sessions. All right, you can see in here, I don't even have to zoom in, you can see that the green, which represents the London manipulation, didn't even raid this low. So this is not something I would have taken. All right, and one other thing is, where am I looking for mitigation? I'm looking for mitigation here. This is my last area where I know that banks and institutions had gotten to the market because this is an accumulation. So this is my last mitigation. So I don't care about what's happening during these Asian sessions. You understand what I'm saying? So I don't care about what happens here. All right, I want to see what does Asian session do when we get here. Now, if Asian session doesn't happen here, then I don't care. All right, that's just an extra strategy. Using Asian session is just an extra strategy. I'm gonna use my regular strategy, which is looking for lower time frame entries, which happens here. All right, you can kind of see, I deleted it, but you can kind of see lower time frame here, that we have several drives to the downside. We have this impulsive move, and you can see we mitigated this tiny order block here, which is a simple entry. All right, so that's one thing. Don't think that this Asian session manipulation is the end all be all. All right, no strategy is. This is just extra things that you can look for. Okay, so let's say you wanted to catch this distribution, right? Knowing that the market is at a high point like this, and you want to see us come back down to mitigate a lower point, you could trade this distribution as a counter. The reason why you could have traded this distribution is because we rated Asian highs. Okay, let me see if I can kind of pull it up for you guys. So you're thinking about how could you catch this move? Well, let's look at it. It's the same thing, guys. It's the same exact thing, but on different. All right, you can see Asian session. Here's the manipulation of London. All right, London session manipulated all these highs. This is a distribution schematic. You see we have the drives towards the upside now instead of the downside, but we don't even have to worry about distribution. We don't have to talk about distribution. Just look at what's going on. Here's a mitigation. Here's another mitigation. You can just follow this little order flow right here. All these mitigations could be possible entries. All right, so that's essentially what happened. Now, understanding that the market is bullish, you know that we're going to react somewhere off of here, and that's exactly what we do here, and we get the mitigation, and then you can see the market just continues towards the upside after that. Now, it becomes harder when you're trading the reaccumulations, the continuation moves, because sometimes the market won't come back down here till later. So that's a problem. You can see this one is still not mitigated. This one is still not mitigated. So I can use these as areas of target. Let's say I get in a sell. I can use this as an area of target. I can use this as an area of target. All right. You're going to be most effective when you're trading this right here. When you're trading the accumulations or the start of the move, that's when you're going to be most effective, because sometimes on these continuation moves you won't get that entry, and that's just how it is. It's always happened. Now, don't get me wrong, the market will give you those entries sometimes, but sometimes it won't. That's just how it is. All right, that's something you have to deal with. I mean, that's not something you can kind of control. That's the market. All right, just understand that you don't want to be trading Asian session. All right, understand that Asian session will get manipulated. All right, it will get manipulated. Use it as liquidity to understand, okay, where the market is going. How can I benefit from this manipulation? All right, so I'll see you guys in the next video. Peace out.